Hello, today I'm speaking to Linda McLaughlin-Moore of JP Morgan, and we're going to talk about issues related to payments and transaction banking. So collaboration is a really big theme in the banking industry right now. What does collaboration mean to you?
Well, when I think of collaboration amongst the banking market, I think of really three things. One is banks need to grow. We need to grow our profits, and we need to grow our customer activities because our customers are growing internationally. We also need to be more efficient in how we execute our growth designs, as well as how we execute our current business in order to support the profit, but equally importantly, to be able to build more capability in a more efficient way. And then thirdly is risk management. We actually need to collaborate with each other to share best practices. We need to collaborate to agree and embrace change that is coming to us as an industry in order to reduce the overall risk to the industry. So generally, the environment that we live in today is requiring collaboration as a must-do. This is no longer a nice-to-do. JP Morgan has prided itself for many, many years in being a full provider of services to banks and by using services of other banks. And I think we're pretty excited about the current era, which is moving in a more positive way now, where banks are actively looking to do more business with each other for those exact reasons. Growing our customers, being more efficient in how we actually execute our business, and looking for opportunities to reduce the overall risk in the systems and the environments that we operate in.
Of course, now we have SEPA end dates. So, how is that journey going?
It's a great question. So the journey on the SEPA end date is actually still not where I'd like to see it be. I think we're all aware now of the 2014 date. I think a lot of our customers we're having a lot better dialogue on as far as how are they going to migrate to that place. I think I'm not seeing as much as I'd like to see within the banking community to aggressively move both ourselves and the customers to that 2014 timeframe. Some of the things that banks need to do is just agree that it is time now to move forward and embrace the SEPA protocol and the SEPA standards. So that's the first thing, which is not necessarily done on national levels in all cases yet. And two, I think we need to prepare to help our customers move to SEPA, actually support them from an integration, migration, technical perspective, as well as to help them understand how this is going to change the environment for their customers as it relates to changing of invoicing and commercial terms that might need to be adjusted. So there's a downstream impact to the ultimate customer. And I think as a bank provider to both corporations as well as to other banks, we, JP Morgan, and we as a group need to take a very aggressive stand as far as what are we doing to help our customers migrate, help them move, bring awareness to what needs to take place, but also as a collective group, the banks need to be aggressive together at actually all those actions with their own respective customers so that we can actually make this happen.
I mean, you mentioned this idea of, dialogue and communication between banks and their customers. That's something I'm hearing a lot from other banks as well.
I know, because, we're in a tough situation now because customers and banks, both, all of us, are dealing with a very volatile market globally. Our customer patterns are changing. Customers are moving towards where the growth is, and that's not necessarily where all of the banks are. So we've got a lot going on, and it's difficult to figure out where do I invest my dollar. And that's true for our clients, and it's true for the banking market as well. Outside of Europe, I'd say the competition is in the emerging markets right now. We're paying a lot of attention to emerging market large banks. Banks that are looking to grow to be more super regional. I think the payment systems are evolving aggressively in some of the emerging markets. Sub-Saharan Africa is a great example as the newest unscathed emerging market in that it hasn't been overbuilt at this point. Certainly we're seeing a lot of activity in MENA and of course Asia Pacific and Latin America. And You know, JP Morgan has been very aggressively growing in the emerging markets since the earlier part of this past decade, and we continue to invest in that. You know, we just launched our branch in South Africa. We're actually launching a branch in Saudi Arabia, and we're continuing to build another 4 branches in the emerging markets in this region. So we're very excited about that, and I think the growth of those regions is reflective of where our customers are going, right? And probably the most exciting of the emerging patterns that I'm seeing is the Silk Road, you know, which kind of takes us back to the, you know, 1,000 or so years. But we're really seeing a huge flight of activities swirling around the China, or you could even say North Asia, India, Middle East, and Africa regions. And it's really just starting to inculcate the activities around the commodity chains and the commodity activities and mining and metals, and just, you know, the future, quite frankly, of where we're going to see sourcing of commodities and that type of activity. So that's pretty exciting for us, and it really speaks well of banking, and I think you'll see a lot more activities and a lot more sophistication in the banking systems coming out of a lot of the banking attention in that particular group of emerging markets.